Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Saturday, the 17th of March, 2007. Happy St. Patrick's Day. We're going to take a look at some stocks for trading on Monday. But before we do take a look at these individual ideas, I want to make clear my feelings about the market. It's kind of choppy in here right now, and I don't think you should get overly aggressive to the long or short side. But because we are in a primary downtrend on this daily time frame, and I define that by it being below the 10, 20, and 50-day moving averages. All those moving averages are declining. I think that means that we still give the benefit of the doubt to the sellers here, and we've got to look at this market as guilty till proven innocent. In particular, the S&P 500, I think, is a little bit more vulnerable looking than probably the NASDAQ 100, where I think you could make probably a better case for a rally up towards that 50-day moving average. But it is in a downtrend, so you got to give the benefit of the doubt to the sellers here. And with that said, let's go ahead and take a look at some stocks for trading, and just be careful with these things, because there's been less follow-through on ideas I've noticed lately, and you're going to have to be very disciplined about implementing your stops. First up, we'll take a look at Ariba, symbol ARBA. You can see the stock got going nicely over in here back in late January, and it broke past some resistance there. Up on big volume, it traded up as high as $11 a share after that rally from 8. So it's pulled back, found some support. Maybe you're trying to find support at this rising 50-day moving average. And if we look at the weekly time frame, it looks like the stock still looks pretty constructive to me. We've got all the moving averages heading higher in this time frame as well. So looking at that daily time frame, we'll now drill down to a shorter term time frame. And I think what you want to do is maybe give it up to about $19.20 to purchase the stock above $19.20, and then set a stop below Friday afternoon's low. So we could set a stop at $9.04. That would give us 16 cents of risk. And for now, what we're going to do is make our target just $10 a share, a nice even target where we'd seen some recent little bit of support in there before this breakdown. So that would be risking 16 cents for the opportunity to make about 80 cents in shares of ARBA. Next up is SIGA Technologies, SIGA. And we've been following this stock for a while. I've had some good trades in it, starting out with this one back in here. Back in late October, got lucky with that gap. But it looks very constructive once again here. We can look at this volume and see how it had increased on this recent rally, and then the volume had pulled back on the little pullback in there. So it shows that it did make it past a little bit of resistance. Now we've got that 10-day moving average above the 20, which is above the 50. They're all advancing. So this is the first pullback since we've seen those moving averages all lined up and all heading higher like that. And now if we look at the 10-minute time frame, you can see in here that it had a pretty good little rally from midday Friday up till the end of the day, around 25 cents. So what I want to do here is see the stock pull back to $4.40 and then buy it above $4.50. So first the pullback, just to shake some people out, and then buy it on strength. I think by that time it gets back above the 5-day moving average there as well. We would set our stop in this case at about $4.23 a share. So that would give us a risk of approximately 27 cents. And on the upside, I think you can expect the stock to move up to about $5.25. Keep in mind, though, this stock does have the tendency to really get going once it does get going. And looking at the weekly and even monthly time frame, you can see that this is pretty much all-time high. So maybe getting above that 525, you won't only sell a portion of it, because it could get pretty dramatic to the upside if the momentum really comes in. But as I outlined it, buying at $4.50 with a stop at $4.23 would give us a risk of 27 cents, and a target of $5.25 would be 75 cents of upside. So a little bit better than, or just about a 1 to 3 risk-reward ratio. CMED is the symbol, if I could type it in right, for SIGA Technologies. And you can see this stock broke down through support. This prior level of support now looking like it's acting as resistance. We've got the 10, 20, and 50-day moving averages all heading lower. So it looks like the stock is vulnerable here to some further selling, maybe to take it back down in towards that $20 area or so. That's not going to be our price target. What we're going to do in this stock is look for a short sale below $23.15. You can see it had some nice late day strength up towards that declining 5-day moving average late in the day Friday. So I think it's breaking below about 23.15 is a good place where the downward momentum ought to pick up, and that'll be good for a short sale. We could put our stop then at about $23.42. So that'll give us a risk of 27 cents in this case, and we'd be looking for a move down towards $22 a share, where we've seen the stock just a week and a half ago. So 27 cents of risk for the opportunity in this case to make it $1.15 in profits. Finally, we'll look at shares of GenPro, symbol GPRO, and same story here. We've got the 10, 20, 50, even the 200-day moving average is declining since it broke down in mid-February there. It's tried to rally a couple times, but making lower highs, and I think it's probably going to make a lower low. We'll just make our target, though, down at these recent lows at $46.30. So our target is going to be $46.30, right around here. And what we're going to do is to sell it short below $47.20. You put your stop at about $47.45. So that will give us 25 cents of risk for the opportunity to make about 90 cents if the stock does break down on GPRO.